very warm welcome to everyone. I am Shrija Agrawal and welcome to another episode of Mint Insights. Today with me is Saugata Bhattacharya, the Senior Vice President and Chief Economist at Axis Bank. Thank you, Saugata. Thank you for talking to us.
As always, pleasure to be here.
Indian banking really is a study in contrast. At one side, it sort of supports the world's fastest growing economy, but also it's grappling with challenges, which sort of tests its strength and resilience from time to time. If you were to give me like 3 or 4 key driving forces that will drive banking in near future, what would that really be?
The first thing that strikes you in this environment is the entire process of resolution, because this has been one of the key areas that has hampered delivery of credit in the system. So how the NCLT IBC process frees up assets and frees up the bank's balance sheets for them to be able to increase their profitability, reduce their provisions, increase their capital, and be able to lend, again, is a very key process. So you've already seen a couple of resolutions. I think more resolutions will now accelerate on the way. So that's one part.
So you're basically saying NCLT is one game changer.
That's absolutely game changer. I mean, we have got to these teething troubles of the initial phases of the resolution process, but I think they are being addressed, and that will ease the process. I think the second part will be the structure of the banking space itself. You would have seen, you would have heard of the finance minister talking about increasing consolidation in the public sector.
Fewer banks, but mega banks.
That's right, absolutely. Yeah. So mega banks, because this is needed, because to be able to exploit the economies of scale of banking with larger balance sheets, etc., you will be able to take on a little bit more risk in the system. Mm-hmm. So the large India, as you pointed out, how does the banking system support an 8% growth of this economy, of this $2.5 trillion economy? How does it support an 8% growth? So to be able to do that, infrastructure is critical, and infrastructure carries its own set of risks. So to be able to deal with the risk, you need a larger balance sheet to be able to absorb, to provide the buffers for these risks, and also to be able to get funding more efficiently so that the costs of capital
comes down, yeah.
But together with this, the third aspect that I think is needed at this point in time is to be able to accelerate the process of this diversified structure of banking. What I mean by this is that together with these large banks that are likely to emerge in the system, even the private sector space will consolidate. So other than these large banks, I think one of the key funding requirements at this point in time is funding for the small, medium enterprises, particularly the micro segments, the emerging enterprises in the system. So to be able to deliver credit, and I don't think the large banks will have the reach to be able to deliver credit to these guys. So for the small entrepreneurs in the system, you need a mix of institutions. We are already in the process. NBFCs are one part, the small finance banks, the payments banks, etc. So that ecosystem will need to develop. You need a series of institutions, and partnerships will be key.
Okay.
And one last thing in this. So in this, again, the role of capital markets will be very, very important. From a regulatory perspective, the large exposure framework from the Reserve Bank and the SEBI directive to get new borrowers out into the corporate debt market, to be able to integrate the banking structure with the capital markets, I think will be another very large play. In this environment, what needs to happen is risk management practices, processes, structures, products needs to increase. So these markets need to deepen now.
Okay, so whether you spoke about the 4 driving forces, you also mentioned this entire paradigm of differentiated banking.
Yes.
Banks' partnership with non-banks,
yes,
essentially for financial inclusion at scale.
Yes.
Your point is that banks will not perhaps be able to provide credit to tier 3 or tier 4 cities in this country. Yes. How do you envisage this, especially with NBFCs bounce back so soon? We have seen them going through a huge sort of pain. What is your sense there?
My sense is most of the pain that you have seen in the NBFC sector is relatively transient. So even in the NBFC sector, the stronger NBFCs will be able to absorb some of the good assets of the system. And this pain, in any credit expansion process, a pain like this always comes about. So one of the key things that the NBFCs have brought into play is the use of technology. And you know what? In this process, the amount of data that is being generated in the system now, together with the GST, with all the India stack data, what the many state governments are now implementing their own data systems. Mm-hmm. These will become very, very important in getting some of these fintech savvy NBFCs and other payment banks, small finance banks to be able to exploit the data structures that are coming in together with their ingrained understanding, their localized understanding of the lending environment. I think that will come into play for funding the entire set of MSMEs, which will be another key driver for India's growth in the system.
Interesting. So we spoke about the four key changes, and you also mentioned about the role of technology.
Yes.
That will be another driving point. Tell me one thing, Saugata, is fintech a fad? Because when I speak to a lot of investors, the term is being used very loosely. Everybody talks about that technology will perhaps disrupt the financial services space. We haven't really seen any of that happen in banking, so to say, as by far. We haven't seen disruption of large scale, or do you sort of another view on this?
No. So, I mean, by disruption, I don't see banks going out of business. But the nature of the banking business has already changed. Remember, the first area that fintechs had focused on was payments. So, for banking, banks used to enjoy a fair bit of fees, etc., and margins in the payments business. That is gone. Banks have been forced to use the payments ecosystem and the payments data that is generated in order to be able to understand customers better. And customers have gained. So bank borrowers have gained from this process. And
so the banking structures will exist, the bank will exist, the physical bank will exist.
But the business models will need to change. The business models, the cash flow models of the banks, those will need to change.
So you subscribe to the Financial Times article which said that the future of banks is no banks. So that is, you're saying that's too utopian to sort of achieve, at least in the Indian context?
Yes, not just in the Indian context. I think in any context all over the world. Look, banks are financial intermediaries, right? I mean, their business is to get savings and make loans out of those savings. That's the basic. I mean, quite apart from all the bells and whistles and the frills of banking, that's the basic business of a bank. That business will carry on for time's eternity. Till business exists, this business will need to work. One of the key areas that has separated various parts of this financial architecture has been regulation. So one of the things I think that will change, but this is not a 2-3 year story. This is a longer term story, 10 years or so, that various parts of the financial system, on the one side, while integrating the partnerships that we talked about, will also begin to separate into various components with deep integration. This has implications for regulation, because regulators now will need to take a much more 360-degree view of that entire financial system, much more coordination between, say, the Reserve Bank of India, the IRDAI, the SEBI, the commodities regulators, the pension regulators, all of these now, because the products will begin to become more and more interchangeable. In some countries of the world, you are beginning to see coordinated, integrated regulators. That is probably the way forward for any financial system anywhere in the world.
When you sort of speak to institutional investors across the world, who are looking to invest in India, and especially in an election year, and it's a very large election year that we are entering into, what are the concerns playing on in their minds?
So, I mean, it's not just an election period. Election periods are important because, I mean, there might be there's always the risk of significant changes in policy direction post the election with the new government, etc., which I don't really think is going to happen. What I think investors are worried about are retrospective changes in policy. Whether it be tax policy, whether it be FDI policy, whether it be market policy, market entry policy, or whatever. I think retrospective changes in policy, I think, bothers investors. But as a matter of policy, irrespective of what political dispensation comes into the system, I think policy certainty, particularly tax policy certainty, is a key must, because I mean investors also have to plan out their cash flows. They cannot have their cash flow models, projections disrupted. So I think any investors will not be bothered so much about the which particular government comes in. They will be bothered about the underlying policies that come into the government. So even if a new government thinks differently on some issues, policy issues, they should probably try to ensure that as much of the current existing policy is grandfathered, no touching of the players, investors who have already come into the system. If they need to change policy, from now on the rules will change.
My last question now, if like one word that comes to your mind, as 2019 begins, what would that be, the word of the year?
I think India, optimism. Optimism is, I think all over the world, investors are worried a little bit about. But optimism is the key. With India, the opportunities with the 7.5-8%
Investors magnet.
Investors magnet. Investors magnet. In an environment where the global world is slowing, India is probably the only one that will accelerate. So, I mean, from 7.2, 7.58 is it's the only country in the world, large economies of the world, that will accelerate.
Okay, thank you, Sakar. Thank you for talking to us.
My
With
pleasure.
that as the end note, India optimism, India emerging as investors' markets, to wrap from this episode of Mint Insight. Till we see you next, goodbye and good luck.